Options and perps are sort of, a yin and yang really of like what you want to do when trading volatility basically. The exchange is like the 8th largest holder of LBTC out there.
We've also had a bit of a DAT mania, DAT and ETF mania over the last couple of months. Are you guys thinking of altcoin markets on the option side?
I see this going like ultimately, I think we want to have a system where anyone can come to Derive and they can spin up a vault that they want. Our biggest barriers over the last couple of years has definitely been on the regulatory side of things.
Agreed. No, we're super aligned with your vision and where we think the market's going to move. Yeah. Hey, Sean, great to have you here with us. Yeah, we're just kicking off this series, partner spotlight series with Derive, one of our longest partners. We've been working with you guys for over, I think, around 2 years. You're the largest on-chains options venue, so wanted to bring you on just to talk about Derive, what makes you unique, and I guess just vibe. So yeah, do you want to give a quick intro?
Yeah, well, thanks for having me. And yeah, been really happy to work with you guys for the last 2 years. I guess I'm Sean, I'm the head of research at Derive, sort of do a lot of the risk engineering and quant modeling. So Derive is the largest on-chain options platform. We're based on our own L2 on ETH, and primarily we focus on ETH and Bitcoin options. So if you want to trade those instruments, we're sort of the place to come for that. In addition, we have, as you guys know, we have a perp market as well. So we have perps on ETH and Bitcoin, obviously, but a variety of alts as well. So your Doges, your world coins, and so forth. We also have a spot market as well, and that sort of rounds out, in our opinion, sort of like what a complete exchange should be. So we've been around for a few years now. So we've been around for 4 years. We started with an AMM model. So this would have like an LP where people put funds in and it would market make options. We realized pretty early on that won't scale. So we evolved into an order book structure where we have all risk management, liquidations, and settlement occurring on chain, sort of to promote, decentralization and this idea of self-custody. And since then, we've been, growing volumes, adding more markets, and really just trying to find and evangelize options. So maybe that's the 60-second spiel.
Yeah, like something I've noticed over the last few years since you launched the order book is you've really expanded the products you offer. Right, you have vaults now, you have earn, you have lending, spot, perps, options, of course. So I guess that's like it's been a snowball over the last 2 years for you guys. So yeah, it's really exciting.
Yeah, completely forgot about. I forgot as well. Yeah, we have an earn product. A yield lending product built into the entire system as well. So maybe it comes back to the ethos that options sort of gives you everything, and we sort of built the system to be as modular and future-proof as possible.
Yeah, definitely. So Kappa's primarily providing liquidity over the perps. We're seeing very good flow over perps from, I guess, options traders hedging their option strategies over perps. What do you think makes Derive unique for options traders who want to leverage perps to hedge their strategies?
I think options and perps are sort of, a yin and yang really of like what you want to do when trading volatility, basically, right? Like if you are, if you're buying a bunch of options like me, sometimes you might want to gamma scalp those things, and perps provide like naturally this, they're the most liquid market. Everyone knows this. And so they basically give you access to the Delta One side of things where you can, buy calls, for instance, and then you can scalp them using Delta One, using perps. I think, like, really the idea behind what we designed at Derive was like options are the bread and butter of what we do, but perps are sort of like this absolutely critical component because you can't really have a thriving options market if you don't have like an equally thriving Delta One market. And in the traditional world, you see a lot of this done with dated forwards. And like on competitors like Deribit, you sort of see a little bit of that. But even they've recognized, and in particular, we have recognized that perps are probably here to stay. And everyone, because they're so liquid and they're so easy and accessible, they're the natural instrument to hedge your deltas basically when you're trading options.
Yeah, I'm quite surprised that there aren't others with the complete package of perps, spot, and options in one platform. But I guess it's a testament to how hard it is to build a system which handles all three, a risk system that handles all three. But that's your guys' background, and you've been building it for a while, so it's a right fit. What about?
I would. Oh, sorry.
No, go ahead.
No, I was going to say, like, I think the hardest part, I think, about like designing like an options exchange is sort of the multiple types of margin you also have to facilitate, right? Like on Derive, we have two broad categories of margin. We have like standard margin, which is, you buy a call, you sell a call or you sell a put, and you have to post a simple amount of spot. And that's pretty basic if you're, just selling covered calls every week. It's a very simple and accessible thing to do. We also have portfolio margin, which is for your more like experienced traders, your market makers, people who, for want of a better phrase, sort of like know what they're doing with regards to risk management. And that's sort of like this, if anyone's familiar with it, this grid, this matrix of P&Ls that you sort of have to assess in real time, basically, in order to assess your margin. And there's all sorts of things, like I can't tell you the number of hours I spent sort of thinking about like spreads. So like when you sell buy a call at one strike and then sell a call at a higher strike in the same tenor, you can sort of make the margin substantially more capital efficient if you implement some smart rules. But basically the long and the short of it is like designing these systems is like quite non-trivial, and then making it work with like a seamless liquidation system as well is another whole can of worms. So the design process was, it took its time, but we eventually got there, and we're very happy with the final result.
Yeah. Do you see what percentage or proportion of users do you see utilizing cross margin and multi-collateral? Like, are there big option traders holding positions against Bitcoin and ETH collateral, or is it typically just dollar based?
Originally, it was all dollar-based, and that's because the system only allowed it at the very start. We had a very limited launch with that, but since then, we sort of realized that one of our edges is the ability to add various forms of collateral quite seamlessly into the system for people to leverage that. So, we have all of the LRTs. So you have your wrapped ETHs, you have your OP tokens. I'd have to go take a look. I think there's like 20 different forms of collateral on Derive right now, like Lombard BTC, Coinbase BTC. I think we're like the 8th largest holder, or like the exchange is like the 8th largest holder of LBTC out there. I'd have to be fact checked on that. But to answer your question, I think most people do use alternative forms of collateral right now. SUSDE and all the Athena USD versions. I think a lot of people do use these alternative forms of collateral because essentially you need to put them to work, right? Like if you're holding, back in the points meta, if you're holding, say, ETHify ETH, you want to put it to work selling covered calls or using that and borrowing against it to buy calls to lever up further. So I would say that that's probably one of the biggest advantages we have of our system.
Yeah, and I mean, from a personal note, I don't want to lose my exposure to Bitcoin to trade or to punt a perp or an option. So want to keep the real money, Bitcoin, in my wallet. I guess today, when we're recording this, is like quite a big day. FOMC is coming out today. People are expecting a 25 bip cut. And we're probably releasing this a day after or 2 days after. So this is going to be in retrospect. But what do you usually see around FOMC? I guess volatility increases. What does that do to options pricing and premiums on Derive?
Yeah, like generally volatility, short-term volatility rises quite dramatically. I think ETH volatility in particular has gone up from like maybe 40, 50% to like 70% in the last 48 hours, 72 hours. So definitely a large spike in volatility. And since the price of an option is mappable one-to-one to its implied volatility, you basically see the price of these options go up quite substantially. So if you're looking to buy cheap leverage or downside insurance to hedge your bags, then it becomes a little bit more pricey. But on the other side of that, if you are thinking that it will be a nothing burger, the FOMC print, then you can come in and earn some very juicy premiums by selling options into this event. And then you could hedge your exposure, your delta exposure with perps, obviously.
Nice.
Yeah, like I think as well, you sort of see the skew as well sort of shift about a little bit. So I think we've seen a little bit of an improvement in the skew. So maybe for context, the skew is the difference between the 25 delta call and 25 delta put vols. So when the skew is positive, it basically means people are buying more calls than they are puts. And so that reflects like bullish sentiment. So we've seen a slight increase in that. So I think on Derive in particular, people are looking to buy calls into this into the FOMC print because, you know, probably there is going to be a rate cut. I think Polymarket's putting it at like 90% plus, and maybe like a 5%. I think 5% chance we'll see like a 50 basis point cut. So those calls will definitely be printing pretty solidly if JPOW comes out with some very, very dovish news.
Yeah, I'm praying for JPOW. So I guess we've also had a bit of a DAT mania, DAT and ETF mania over the last couple of months. That this must have had a big impact on volatility, and have you seen an uptick in speculation on calls or puts on Derive?
Yeah, like I mean, the DAT stuff has been pretty crazy. I think it's gone from, since April, I think DATs have gone from owning virtually 0 ETH to like 4% of the total ETH supply. And in addition to that, you have, I think Ether Machine is one of the latest ones to come out, and I think they're meant to have like $1.5 billion worth of ETH that they're seeking to buy. I think they've already bought a good chunk of it, but they look to own like 10% of the entire ETH supply. So the long-term vision, if it's realized, is like you'd see these DATs holding probably at least 15 to 20% of the total ETH supply, which would be crazy. To answer your question, I think the last couple of months, because of that, have been like quite wild for vol for ETH. And in particular, you see people buying calls on Derive. Like that's people just like to speculate. People like to get this upside. The beauty of calls, the beauty of your options in general is, you pay $50, and unlike perps, like you can get convexity. So your payoff is nonlinear, and it just grows and grows and grows. So if you win bigger than you would if you bought a perp at 10x leverage, and you don't get scam wicked down. That's the other great thing. So
it's been like a huge shift change in demand for Ethereum. So I guess price is reflecting that. And if it continues to happen, if we get to the 15, 20% that you mentioned, that's kind of mind blowing. But that's the trajectory that we're seeing, I guess. It's up and to the right, accumulation of ETH. But we just saw some Solana DATs be released, and people were speculating Solana ETF in Q4. So do you expect a similar scenario there?
I would think so. I think what was it? Kyle Samami is going to be the chair of this new DAT. I think we'd probably see a similar story unfold for Solana. And I think all of this is sort of contingent upon like continued dovish policy from the Fed. So if we get an unexpected result tonight, maybe like no rate change, I think there's like a couple of % chance of that, then a lot of this stuff does get thrown into doubt. Like probably not long term, but like definitely in the next like couple of months, it will be a little bit rougher. But I think maybe the long and short of it is, I think the Solana ETF is going to come. You're going to see these DATs pop up as well. I'm not as much of a Solana, I'm not as knowledgeable of Solana as I am for ETH, but I think that you probably see a similar story unfold there.
Yeah, I think one thing that's unique for Solana is their yield, right? So Solana staking yield is over 7%. I think a GTO yield is like over 7%. Plus, there's a load of LSTs that can leverage that and get more yield through lending, etc. From what I heard, Kyle's vision for Forward is to deploy majority of funds in DeFi through staking, through other means to farm yield and pay off as dividend. So it may be, quite an attractive yield for fixed income or other allocators into traditional finance space. So yeah, interested to see how it could catch up to ETH in terms of flows and whether it's a snowball as well. Are you guys thinking of altcoin markets on the option side? I know it's been a Bitcoin and ETH focus. That's where most of the interest is. But what about Solana or even Doge in the near future?
Yeah, like Solana and Doge are the most natural choices. I think we are always exploring those. Definitely, the hardest thing we've learned with like running an options exchange is that liquidity is your greatest foe. You need a lot of capital to stand up options markets because if you have 5 expiries and you have 20 options per expiry and you have calls and puts, then you just have to multiply those numbers together, and very quickly you have to have a large sort of bankroll in order to market make such a book. I think we probably will look to launch those markets in the future. I think what we really need to establish is like the liquidity for that, and we have like some exciting news on that coming up. And broadly, I think, I don't know. I think that more broad alt markets, I think those will be more like an OTC thing as they currently are. I think a lot of, I can't remember the exact fact off the top of my head, but I think a Wintermute report a while back that like half of all of their like derivatives flows come from OTC markets. So I think that a lot of the altcoin market for options will come from like OTC venues. And like we can definitely facilitate that as well. But I don't think you'd be seeing like a big order book for, I don't know, your what's your favorite alt? I don't know, your WorldCoin options. I won't be seeing that anytime soon. Those will be more bespoke OTC trades.
Yeah, I guess it's super hard to price those alt options. There's like a lot of unknowns, especially for something like I don't know, like a WorldCoin or like if you go as far as a meme, it's that's super volatile, so can only be done OTC. You guys have RFQ inbuilt, so it's so it's easy for you to build out, or if you have the liquidity providers to offer those products.
I think as well, like just with liquidity, like going back to my point with what Wintermute said, like the issue with altcoin options is generally they're very illiquid, and because there's illiquidity, you don't have competition, and with a lack of competition, it generally means poor pricing. So if someone wants to come in and sell a bunch of AVAX calls and do covered calls that way, then they will often have pretty poor pricing. And what we're really striving for now is like to improve that experience by having, like, as you said, this RFQ system, and by having multiple market makers or counterparties bid on it, that naturally improves the pricing quite dramatically. And we hope to provide like a really good service for that when we launch these altcoin markets. And I think that will be like a pretty important thing, because you have a lot of these treasuries, you have a lot of whales and like individuals who do hold large bags in things that aren't necessarily monetizable, right? Like if you're going back to WorldCoin, if you're a WorldCoin holder and you hold a bunch of it, you can't really do too much about it. Sure, you might be able to earn some nominal staking yield, but you can do a lot more with it if you can monetize it using options. And I think that that's really the big value prop. But the barrier so far has been like a pretty poor experience with the liquidity. So if we're able to solve that, and I think we're on the cusp of that, then you will have a lot of demand for that as well.
Yeah, super exciting. Yeah, I guess alt options have been siloed away for, you know, larger investors, institutional investors who can trade OTC with, say, a Wintermute. So yeah, really excited to see you bring that to the masses through RFQ and Derive's risk engines. One thing I wanted to talk about, and I left it to the end because it may take up a lot of time, is your vaults. I think vaults on Derive is quite a unique product. In particular, at Kappa, we've had a bit of a struggle with traditional style vaults. We find them quite restrictive. Typically, exchanges will have one deposit currency and one collateral currency, like a dollar or USDC. And those vaults would be single product as well, so exist just over perps. So you can only run vanilla strategies on perps. We want to offer stuff which is more complex and things that maybe other users won't have available to them, such as offering yield or return on top of Bitcoin or on top of like an LST. This is something that people can provide through Derive. So yeah, I wondered if you could give us a deep dive into vaults and what makes Derive unique to offer strategies on Derive, and perhaps what kind of strategies do you envision or are you seeing being built through your offerings, your vault offerings?
Yeah. All right. Well, stop me if I'm go on too long, but I think really Derive has the full suite of tools you need to generate whatever yield you want. Options, as Nick, our CEO, likes to say, are this like infinite payoff factory, or ultimately like the most composable financial instrument out there, right? You can build any payoff structure you like, and that's like the ultimate flexibility. So far, we have, I've lost count, maybe like 8 to 10 different types of vaults on Derive. Most of those are options. So we have like call selling vaults, covered call vaults, a la Ribbon, and your, that sort of thing. So you come in and you have your favorite LRT, sorry, your EtherFi, your Kelp, your Swell, your Lombard. You put them into this vault and you can sell calls every week, and that will generate yield. And those don't have any fees associated with them, no management fees. And so like that's a very simple kind of strategy. We have other strategies where you can come in and you can put in SUSDE, which is Athena's yield generating stablecoin. And each week, like the yield is taken off from that and used to purchase calls. So you can take your, Delta Zero stablecoins, use the yield from that to get exposure, like quite levered exposure with literally no downside risk, right? Like you just basically trim the yield off and use it to get exposure to ETH. And if it does well, then the yield basically goes from whatever it typically is of like 10% up to like 50%, I think is the cap on that. So you have those basic strategies. We also have strategies for perps. So we have basis trading vaults. So you can come in, you can put in your EtherFi or your Lombard, and then those can sort of generate yield because you hold the base asset, which generates yield. You sell the perp against it, so you earn funding rate. And so overall, you earn quite a bit of yield from that. And it's levered as well, so you maintain exposure to your Bitcoin or your ETH as you hold that position. So maybe that's like what we've got so far. So like overall, like right now, we have a pretty nice suite of things. Where do I see this going? Like ultimately, I think we want to have a system where anyone can come to Derive and they can spin up a vault that they want, right? Like, Kieran, if you're like, like I want to do like a market making vault, or I want to do, I don't know, any kind of crazy strategy you want, like maybe I'll buy risk reversal. So I'll buy calls and sell puts. So I essentially, lever up to the upside, and I get that for free by selling my downside. I think we really want to have this sort of space where people can come in, deploy vaults, pretty much very similar to what you see on Hyperliquid, and sort of have this like free flowing of like opinions on the market. And I think that will generate, a lot of volume for the exchange. I think that'll be great for traders, because now you have liquidity, and that's sort of the ultimate vision. I think more like medium term, what like I think is the problem with vaults right now is like, they're sort of locked into like one strategy, right? So, if you want to sell calls, you sell calls every Friday, and that's sort of what the vault will do for you. But like ultimately, the way I think of it is you should sort of have like a matrix of vaults, right? Like you can have bullish, bearish, or neutral sort of sentiment, and like low, medium, and high volatility. And so you have a strategy for each of those things. So you have like 9 different strategies. And ultimately, like you can sort of hop between them based upon what your opinion of the market is, the current conditions, all sorts of things, like your desired yield. So really, it's like the ultimate form of automation, where you can get some like amazing exposure. It's fully customizable and tailorable. So I think ultimately that's maybe what I think will happen in the medium term. And long term, I think you just want to have a vault for everything. That's really it.
Yeah, I agree. I think something that a lot of people in a lot of users in DeFi might find hard is to understand the complexity of the vaults, or exactly the strategy that's going on. So if you're able to tailor those down into more simple, bullish, bearish, neutral, it's maybe more enticing or accepting for users to deposit or invest into these type of vaults. I think like vaults are, like you said, all about flexibility and opening up strategies to users who otherwise wouldn't have access to these types of strategies. It's really like the DeFi ethos. So I think, if we have as many as possible offerings to users, that's exactly the vault ethos, the DeFi ethos that we should be striving for. I was particularly, No, go ahead.
I was just going to say, I think options are sort of a victim of their own success, and like they are like super tailorable. They're incredible financial instruments. Sorry, I'm fawning a little bit over them, but like they're really, really they're really, really cool, and they let you do so much. But the problem is that they are super complicated. I know the first time that I saw an options book, I had absolutely no idea what was going on. And I think that for your average, retail trader, you open like the Derive order book for options, and you have no idea what's going on. Whereas for perps, it's like pretty simple: buy if it's going up, sell if it's going down. And I think that the point of vaults, as you said, is like sort of to really distill what all this is into like all this financial complexity, all of these like Greeks, all of this like dimensional risk, and say, hey, like if you think this, like here's a vault for you, and this vault will go do this thing. And I think that that's really the way of making these instruments, which frankly haven't seen as much, as much prominence as say perps have. Because they're just too complicated, and you need a mechanism, a vehicle to sort of distill that all down. And I think that's what vaults provide.
Yeah, 100% agree. I've learned so much about options in the 2 years working with you guys, and in fact today probably learned a lot as well. So there's definitely a way to break this down more simply for users, for DeFi users, or just on-chain traders who may just be used to perps, simple long-short strategies.
You'd be surprised just how many TradFi people don't understand options as well, right? It's not a crypto phenomenon. I think even in the traditional world, I think you have a lot of fund managers who, sort of get it, but don't truly get it. So, yeah.
It is still very embedded into the crypto industry, into our industry, into the institutional part of our industry. Options are used frequently by market makers to price token market making deals. They're used frequently on the OTC side, like you mentioned. I just think there's been a less interest from the DeFi user base, I would say. Deribit got acquired by Coinbase earlier this year, like a few months ago, and that was a huge acquisition. So it's a clear signal that there is options interest, especially from the institutional side. I think maybe we're waiting for some of those players to move over to DeFi or be comfortable leveraging non-custodial wallets and trading venues. So where are you seeing that going? Are you seeing an uptick? And what do you need to make these guys more comfortable to trade options?
Yeah, I think one of the biggest barriers over the last couple of years has definitely been on the regulatory side of things. I think I can't even give you a number for the number of conversations where I've talked to people and said, oh, like we'd love to trade options on crypto, especially on a crypto native exchange. However, we're worried because of such and such regulation. And I think that I think that may be starting to change with the current administration in the White House. I think, as well as that, I think is also just when you're trying to get big institutional players, they want to see they want to know your reputation. And I think at Derive, had we gone to them 1 year or 2 years after being live, I think that doesn't have enough lindiness, that doesn't have enough reputational backing at that stage for them to be comfortable parking, $50 or $100 million worth of capital onto your exchange. But I think that as we're going further and further, we had, I think, the 3 largest on-chain options trades last year or earlier this year. I can't even remember now. Time blends together. But I think when you build more reputation, I think that sort of begins this snowball of momentum where a medium-sized fund comes, then a medium-sized fund comes, then a larger fund comes. And it's really just a process of going out there and just showing these people what's on offer. And I think that the product speaks for itself in that regard. And as for retail, I think retail will come. And I think that right now the problem has just been one, lack of accessibility. I think Derive has built an amazing product, but we have not been as great as sort of putting the product out there and marketing ourselves. And I think you've seen there definitely is a retail demand for options. Zero DTEs have been absolutely huge in the last 5 to 10 years, especially since the start/end of the pandemic. I think that retail does have an appetite for options. It hasn't translated to the crypto world right now because there are perps, but I think, as I said earlier, once they get a taste of convexity, when you buy a call, a 5 delta call, and then, you wake up the next day and you've gone 600% on that. I think that hit, I think that will be quite something that we'll never forget. And I think that will sort of breed itself a whole new type of trader in retail crypto.